You see a stock at $150. You think, that's too expensive. I remember when it was 100. So you wait. It climbs to 200, then 250. You are frozen, anchored to a past that no longer exists, while the future sails away. This isn't bad luck. It's a predictable feature of your mind's operating system. This force has a name, the anchoring bias. It's a cognitive shortcut that forces your brain to rely too heavily on the first piece of information it receives. This initial piece of information, whether it's a price, a statistic, or a salary, becomes a mental anchor, warping every subsequent judgment and decision you make about that topic. Think of it like setting the first pin on a map. Every other location is now judged in relation to that first pin, even if that pin was placed randomly. In finance, this means the first price you see for a house, a car, or an investment becomes the yardstick for its true value in your mind, regardless of its actual, current worth. This glitch isn't your fault. It's a mechanism for making quick decisions in a world of overwhelming data. Our ancestors didn't need to calculate the precise future value of a berry bush. They just needed to know if it had more or fewer berries than yesterday. But in the modern financial world, this ancient software runs a dangerous script. A script that costs you dearly. The damage of this bias extends far beyond just missing out on stocks. It infects your salary negotiations, your major purchases, and your perception of your own net worth. It creates a distorted reality where you are constantly making decisions based on outdated, irrelevant, and often completely arbitrary information. So how deep does this rabbit hole go? Let's deconstruct the mechanism in the world of investing. You see a great company whose stock has risen 30% this year. The business is stronger than ever, with growing profits and a clear path forward. But your brain ignores all of that. It's anchored to the 52-week low, a number it treats as the real price. This creates a painful paradox. The better a company performs, the more its price rises, and the more overpriced it seems to your anchored brain. You end up in a state of permanent waiting for a dip that may never come, while the actual value continues to compound without you. You are punished for your prudence. The same trap appears in real estate. People remain renters for years, anchored to the housing prices of a decade ago. They say, I'll never pay that much for that small house. They are comparing today's market with today's salaries and inflation to a number from a completely different economic era. Their anchor prevents them from building equity. This bias is most insidious during salary negotiations. Many people anchor their worth to their previous salary. If you were making $50,000, you might ask for $55,000. But what if the market rate for your skills is actually $80,000? Your anchor to the old, irrelevant number just cost you $25,000 a year. Even in simple shopping, anchors dictate your behavior. A store shows a watch with a price of $1,000, then offers a 50% discount to $500. Your brain anchors to the $1,000 price, so $500 feels like a fantastic deal, even if the watch was only ever worth $200. You didn't save money, you were manipulated. This is not just about money. It's about opportunity cost. Every time you anchor to the past, you are sacrificing a piece of your future. You are choosing to operate with bad data. The question is not whether this is happening to you, but where and how much it's costing you. But what if you could break the chain? So how do we fight a flaw embedded in our own cognition? The first step is not to ignore the anchor, but to consciously reset it. If you're anchored to a stock's past low, you must intentionally introduce new, more relevant anchors. What is the analyst price target? What is the price-to-earnings ratio compared to competitors? This technique is called consider the opposite. Before making a decision, actively argue for the other side. If your anchor tells you a house is too expensive, spend 10 minutes building the strongest possible case for why it might actually be undervalued. This forces your brain to acknowledge data points outside of its initial reference frame. Another powerful method is to shift from price-based thinking to value-based thinking. The anchor is always a price, which is a historical fact. Value is a forward-looking assessment. Forget what it cost in the past and ask a different question. What is the potential value of this asset to my life and my goals over the next 10 years? For salary negotiations, never be the first to name a number based on your past. Instead, anchor the conversation to market data. Use research from industry reports and job sites. You are not asking for a raise from your old salary. You are stating the current market price for the value you provide. This reframes the entire negotiation in your favor. Finally, apply the zero-based test. If you own an investment that has dropped in price, the anchor is the price you paid. You hold on, hoping it will return. Instead, ask, if my portfolio were 100% cash today, would I buy this asset at its current price? If the answer is no, your anchor is tricking you into holding a loser. These are not simple tricks. They are mental frameworks that require conscious effort. You are actively overriding your brain's default setting. By doing this, you're not just making better financial decisions. You are reclaiming your agency from an invisible cognitive puppeteer. You are choosing to live in the present, not a past defined by an arbitrary number. Let's consolidate this into a single, powerful mental model. The anchoring bias is a chain that shackles your present decisions to past information. The strength of the chain is not in the metal, but in your lack of awareness. The moment you see the chain, you begin to dissolve its power over your financial life. Every major financial decision point is a test. Your brain will automatically, instantly search for an anchor. It will offer you the price you saw last year, the salary you used to make, or the manufacturer's suggested retail price. Your job is not to fight this impulse, but to recognize it and calmly say, that is data, but it is not the truth. The truth is that the value of an asset is what it can do for your future, not what it cost in the past. The truth is that your professional worth is determined by the market today, not by your employer yesterday. Your freedom lies in your ability to distinguish between a number and its meaning, between price and value. By consciously choosing your points of comparison, by arguing against your own initial instincts, and by focusing on future potential rather than past costs, you upgrade your decision-making software. You move from being a passenger, dragged along by cognitive biases, to being the pilot, using data to navigate towards your goals. This isn't about becoming a perfect emotionless robot. It's about understanding the machine you're operating. The anchor will always be there, ready to drop. But now, you know what it looks like. You know how it feels. And you have the tools to pull it up before it takes root and holds you back from your financial potential. You have learned to break free from the chains of the past. You make a smart investment, you negotiate the salary you deserve, and you see your income rise. But this victory introduces a new, more subtle psychological challenge. What happens when more money doesn't lead to more peace of mind? You've escaped one trap only to face another. We have journeyed through one of the mind's most expensive glitches. We've seen how a single, often random number, the anchoring bias, can chain you to the past, preventing you from seizing future opportunities in investing, your career, and major life purchases. We've given this invisible enemy a name and exposed its playbook. The key takeaway is this: your first instinct is likely based on an anchor. True financial clarity comes not from finding the right number, but from developing a process to question the first number your mind offers you. The mental models we've discussed, resetting your anchor, focusing on value, and the zero-based test are your tools for this process. By mastering this, you have taken a monumental step toward aligning your financial actions with your long-term goals. You have given yourself permission to make decisions based on the present reality and future potential, which is the cornerstone of building genuine wealth and, more importantly, financial peace of mind. But this raises a critical question. You've successfully used these tools. You got the promotion, you earned more money, your bank account is bigger than it was last year. So why do you feel just as stressed, just as pressured, and just as far from your goal of financial freedom as before? Why does it seem like your expenses magically rise to consume every last dollar of your new income? This isn't a failure of discipline. It is another design flaw in our psychology. an invisible treadmill that ensures you can never get ahead, no matter how fast you run. It's a trap where the reward for your hard work is not freedom, but simply a more expensive set of anxieties. The video on your screen right now deconstructs this exact mechanism. Understanding the anchor was about seizing opportunity. The next step is about keeping the rewards of that opportunity. If you are ready to stop running in place and finally turn your higher income into real, tangible progress toward freedom, you need to understand this next trap. Click the video you see on the screen now to begin.